Good afternoon, ladies and gentlemen. Welcome to Business Today Television. It's not turning out to be a day that is working very well for bulls, let me put it very honestly. It's the last day of August's FNO expiry, and all that you see is blood on Dalal Street. So, down by about 175 points today as far as Thursday is concerned, the last Thursday of August. And if you look at the daily chart, this is the intraday chart which is right there in front of you, and daily chart is even more painful. 25,200 was something that we saw on 21st of August, and from 25,200 we are down all the way to 24,535. So, that is a 700 point fall, and the reason, ladies and gentlemen, is the extra tariffs that have come in from the US effective 9:30 a.m. Wednesday, which was yesterday. Because our markets were closed, therefore, we are reacting today, and at day's low as far as the Nifty is concerned, heavy selling pressure, rollovers are negative, and what you see is the Nifty lowest in 3 weeks. This number was last seen on August 14th. So, that is the pain, ladies and gentlemen, as far as Nifty is concerned, and overall for the month of August we are now down about 1.5% on the Nifty alone. So, 2 successive months of losses. July the Nifty was down 2.9%, we are down about a percent and a half now, and today's fall, ladies and gentlemen, is led by the following stocks on the Nifty. So, you have weakness because of Reliance, down 0.5%, HDFC and ICICI Bank are down more than a percentage point each, L&T, Bharti Airtel and Bajaj Finance are also amongst the losers, and they are resulting in a negative loss of about 40 plus 30, 70 plus 30, 100, 130, 154 points on these 5 stocks. What is pulling the Nifty higher? It is Hindustan Unilever, ITC, Maruti, Eicher Motors. So, these are stocks that are now keeping the Nifty stable for a reason. Maruti record high, Eicher record high, and of course, 2 or 3 major transactions happening on Ola Electric. Value buying on Ola Electric continues for 2 reasons. One, it was thrashed beyond visibility, and this rejig in auto rates for GST is helping this 2-wheeler maker. The second is Indigo, aviation company, top traded today. 10,000 crores has been traded on Indigo alone. This is a block deal that has happened for a 3.1% stake as far as the overall market is concerned. If you look at the advanced decline ratio, pain all around, 780 stocks in the green versus 1780 in the red. So, it is 1:2, it is really bad, and all 19 indices, ladies and gentlemen, are in the red. To discuss this and a lot more, we are joined by Mr. Neeraj Dewan, a very well known market analyst based out of Delhi. Namaste Neeraj ji. I wish I had something positive to say about markets. How do you see sentiment on Dalal Street today?
Namaste, sir. Yeah, thank you for having me on your show today. Actually, though we knew that yesterday the additional tariffs are going to come in, and day before markets had reacted to that. So today there was expectation that then we saw this fall in the morning and some recovery. There was expectation that maybe the fall is over for the time being. But I think because today's expiry, and some people would be squaring off their position, not carrying them forward. And there are people who were still expecting, it looks like with the fall of day before and today, that there was still this expectation that this additional 25% will not come in. So that disappointment is showing on the screen, which was day before plus today. So I think post today's expiry and, this initial disappointment fall that we've seen, I think suppose that I see some stability coming back, because see, one thing was good for us that from the lows of 24,360, 70 that we saw earlier, markets had rebounded sharply and come up by 500 points. So these 2 days of fall is basically at least taking us there to test those levels. Let's see whether market goes close to those levels, then bounces back, or after today's expiry, you see some more stability in the market. So that we still need to see how the markets will play out in the shorter term.
Right. Neeraj, because you advise a lot of ultra HNI clients in Delhi, uh, what are their portfolios now looking like in terms of strategy? Are you chasing momentum at this point of time? It's clearly absent in the markets. Are you buying value? If yes, where are fresh funds being deployed? How are you sort of managing their expectations at this point of time?
See, basically, whatever cash has been there, because some cash was definitely there because we were expecting this, 50% jolt to come. So there was a
Okay.
50% expectation, but we had kept some cash for this kind of a market reaction, whether it is for mutual funds or direct equity. So, now, basically right now the money is getting invested in value for sure. We are looking at stock where you're getting reasonable value. And second is that domestically focused stock, like, one stock has been a favorite for everyone, like everyone mentioning Hero Motor. So similarly, the other domestically focused stock, which will benefit because of domestic economy, domestic GST rates, rejig, order flow coming in, you know, financials, domestic financials. So these are the kind of sectors where, infrastructure, real estate, you're looking at, your capital goods, construction stock. These are the sectors where I feel that there is value and they should do well, once the base is made in the markets. There are other sectors where you are getting impacted due to tariffs, whether it's the textile stock, something like a shrimp exporter like a Vanti Feed, or something like a Garware High Tech Films. These are companies which had good exposure to US export. So those we are keeping under watch because there's some very good companies in that space, whether it's textile, whether it's auto ancillary, whether it's shrimp exporters. So these are very good companies which have to be bought at certain level, but not right now. So those have to be kept under watch. So when you get some indication of some talks emerging as far as the tariffs are concerned, those can be considered then. But right now it's basically focused more on domestic economy and domestic focused stocks.
Right. One point I forgot to mention, ladies and gentlemen, August 30th and 31st are last days for filing your income tax returns. So, for those in the market who are filing returns, they are also raising money by selling equity. So, a part of the sale in the market or the red color that you see on the Dalal Street is also because of income tax returns that have to be filed or are in the process of being deposited. So, that is also one of the reasons why you see this deep shade of red over the last 3-4 days. August 31st is the last day to file returns. Neeraj, you mentioned Hero Motors, and for long-term observers of the market, Neeraj slipped in the earlier name, which was Hero Honda. Nevertheless, this is a stock which is doing very well in the markets, up 1% now. And ever since Prime Minister Narendra Modi announced the rejig in rates for GSTs, this has been one of the biggest beneficiaries as far as prices are concerned. Rural focused, great monsoon, higher income in the hands of potential buyers because of income tax rate cuts, and of course this bonanza that's in the pipeline. Neeraj, where is this headed? Where do you think Hero Motors should be 6 months from now?
I'm expecting that 6 months from now, you can at least get a 10% odd kind of a thing, a pop up from these levels also. Because, like you rightly said, there is a lot of positive for the space, for the stock and for the two-wheeler space. One is the GST, income in hands of people, good monsoon, low interest rate, and valuation comfort. So if you see stocks like Hero Motor or Bajaj, I think the valuation comfort is there. If you look at the long-term average valuation that they've been trading at. So I think that kind of increase in the next 6 months I can see in a stock like Hero Motors.
Okay. The other issue, Neeraj, as far as the markets are grappling with is, of course, higher tariffs, but this inventory mismatch because of GST rates, something that the government needs to do to clear the present supply chain, because GST rates will be applicable from a certain period onwards, and people will delay purchases till that point. So, a shopkeeper or a wholesaler or a distributor is caught in that conundrum. पैसा फंसा हुआ है existing inventory पर higher GST rate पर. So, maybe some part of the market is also feeling this kind of a pinch because of inventory re-evaluation or maybe supply chain risk.
Yeah, I think you're absolutely right because they can't do GST reject in a day or 2 days. So now they've announced it, and it may take a month for it to get implemented. Like there's expectation that end of September you may get the new rates, and things should change from that. But till that time, definitely there is uncertainty. There is holding back by customers on their purchases that can impact some of these consumers or consumer durable and consumer related stock. They can be even discounts by the sellers to increase their sales. So for a consumer, maybe it may not be that bad. Either they'll get some discounts right now on the old stock which need to be taken out. So some sale bump up can happen because of that, but no, not at the right margin, definitely. So this period, definitely this 1 month is going to be really tricky as far as sales is concerned for most of the consumer-based stocks.
Okay, fair point. So, value in stocks like Hero Motors, maybe to some extent, even Garware Fibers, only time will tell when that value will emerge. Neeraj ji, what about broader markets? You are being extremely stocks specific at this point of time. What is the percentage of cash in your ultra HNI portfolios?
The cash was about 10 to 12% only. So
Okay.
that 10 to 12% getting deployed now.
Huh.
So
Okay.
you're not sitting
Okay.
in too much cash also because you've been actually this year has been full of opportunities. You've seen a lot of market correction happening this year. So cash is getting deployed on every correction, every dip. So now the last 10 to 15% that is there is getting deployed.
So piecemeal into stocks like Hero Motors, or are you buying a chunk?
No, basically it is across. So whether I can give you two, three, four names that we've been looking at and
Huge.
they're positive. So besides the large caps, in the mid cap and the mid space, there's stocks like BEML, which I like, and that is because of focus on railway and defense both. So it's a mix of railway and defense. It's a good company, and you've seen that it's corrected a lot from the peak it saw 5,000 around.
Yes.
So this is one stock, and then another stock would be like a Surya Roshni, one company which first quarter was not good, so we saw correction. But if you listen to the call and you speak to the management, they're very positive for the rest of the year. So things are picking up from this quarter for them, and already more than half of the quarter is over. So this is another stock. There in the financial, there's something like a Fino Payment Bank, which is doing well. Plus, they are expecting a small payment finance license that can come their way the next month or 2 months. So that is another stock I'm positive on. And besides this, real estate is another sector which will benefit because if there's a GST rejig on cement and cement prices will come down because of lower GST. Real estate and construction stocks should also benefit. So the real estate space and construction space, stocks like smaller stocks like Mac Estate or the bigger ones like a DLF. In the construction space, something like NCC. These are kind of space sectors and the kind of companies I'm looking at and we adding on the dip.
वैसे नीरज जी, it is such a such an irony that GST gets corrected on cement companies and we buy real estate stocks. Cement को कोई पूछता ही नहीं है अब.
The cement stocks have done well actually lately. If you see last 2-3 months, they've done well.
हाँ,
So I think that outperformance should continue with cement also.
true. Any favorites there?
Actually, there's no specific favorite right now because the stocks have moved up. So
Yeah.
2-3 months back, if you would have asked me, I would have given you 2-3 stocks. But now, at this point, I think they'll outperform the market. But to get that exceptional gains, something like India Cement or Ultratech,
Yeah.
so they've already moved up also a lot.
Correct. That's fine. I mean, yes, Ultratech is at a record high. I think it's appreciated 13-14% in the last 2 months itself, and so is India Cements. This is today's change. If you look at the monthly chart of Ultratech Cement, you will get a 15-17% uptick. I think this was the best performing stock on the Nifty. I think in the month of July. Be that as it may, point taken. Yes, there has been a very sharp rally in many of these stocks, and some of them have moved because of potential GST rationalization as well. Neeraj ji, what is it that you don't like at this point? What do you think is still in a painful zone?
So one would be your IT, which I've been, earlier negative on IT, but now more or less got neutral there. I think that maybe the base is made, but for IT to really outperform or to do well will take some time. You need some more clarity as IT is concerned. And another space would be pharma. I'm not very sure right now because if you see stock specific, you get good opportunities there. But as a space, there's still not, you don't get clarity there what going to happen as far as US is concerned. And a lot of them are dependent on US. So these are two spaces where I'm being little careful right now. And like I earlier mentioned, whether it's the totally export-focused stocks like textiles, shrimp, and some other companies, where I'm just keeping a wait and watch right now because I don't really want to jump the gun and buy them right now and hoping that tomorrow this additional 25 will reverse. So let that happen because you'll get the stock 10% expensive doesn't matter because they're coming at a very good valuation right now. So 10% higher also will not too much of a difference.
That's true, sir. It's better to buy 10% higher and get into a trend rather than buy now and then get yourself stagnated with an underperforming stock. That's an absolute no-brainer when it comes to deploying money. Neeraj ji, on this note, we'll draw to a close. Sadly, we are at a very somber stage as far as markets are concerned. Maybe it's the expiry, maybe it's the hangover of the fresh tariff that has come in. Be that as it may, markets are down for August as well, and you have this 0.5% downtick on the Nifty. We live for exciting times ahead, and just as a lot of sensible investors have not only said but experienced on their own, this too shall pass, and maybe 6 months later, around Christmas, around the end of this financial years, we will be laughing over ourselves on the kind of downturn and this lack of sentiment is there on Dalal Street. These are phases in life and these are phases in market. ये भी चला जाएगा. On that note, Neeraj ji, thank you so much for your time.
Thank you, sir. Thank you for having me.
That, ladies and gentlemen, was Mr. Neeraj Dewan, a very well-known market observer in New Delhi. He advises a lot of ultra HNI portfolios and has a very practical understanding about markets. And he says that value is something that he's buying. And one stock that he mentioned was Hero Motors, the other being BEML. Both stocks have BEML in particular has corrected fairly decently from its all-time high. Hero Motors has moved over the last week or so, but that's mainly because of the plans of GST rejig, but nevertheless still offers value. On this very quiet note, let me call it a day, and then we'll be meeting tomorrow on Dalal Street with as much optimism at our disposal as possible. Thank you for watching.
Donald Trump's 50% tariff on India has kicked in. While sectors like pharma, electronics and energy are exempted, textiles, leather goods, gems, seafood, which are vulnerable, are feeling the pinch. For Tirupur, the textile hub of Tamil Nadu, which is recovering after a series of setbacks like COVID pandemic,